So with no debt ceiling deal, is SPY going to go to 400? So basically, the debt ceiling talks are kind of in a bad spot right now as negotiators took a pause earlier on Friday and have resumed talking Friday evening. Basically, the debt ceiling negotiations, they ran into trouble and it spooked the markets today. Absolutely, you saw the markets take off yesterday on the idea that a deal was going to be made. And then when they got the hard stop, specifically in the market, the hard stop, and they did the pause, and you saw the negotiators come out of the room live on the Capitol Hill, and they looked very frustrated. That's when you saw a very dramatic shift in the market overall, and it took a tumble right about this area, as you can see by the chart. And we were still choppy down at the bottom, kind of running in, sideways action with some sharp 180 reversals, but we ended up continuing to get lower and lower as the day winded on. Basically, the frustration came and the pause because the meeting wasn't becoming productive. And basically, they're talking about how the Republicans are saying that the White House, which the White House is represented by the Democrats in this particular, vernacular that they're utilizing. And they're saying that, until people are willing to have reasonable conversations about how you actually move forward and do the right thing, then they're not going to sit there and talk to themselves. And as we go into this, you'll kind of understand a little bit on what exactly they were talking about. So, of course, as these negotiators came out and looked very frustrated, they got, bombarded with a whole bunch of reporters and stuff like that. And when asked if negotiations would be meeting in person over the weekend, they said they're not sure right now. We're not there yet, in a remark. And the U.S. stocks took tumble. The Dow was down at 33%, sold off after the remarks to reporters. And the three main equity gauges, the SPX and the Comp, were both down as well, and they closed with modest losses today. Traders were also assessing remarks from the Federal Reserve Chair Jerome Powell. So we kind of had a double whammy. Not only did we get hit with, we got the debt ceiling pause, and then the Feds basically were alluding to the fact that we're not quite there yet with inflation, and we got more to go to get to 2%. And, of course, it didn't help that Janet Yellen came in and said that more bank mergers may be necessary, kind of giving a little idea that the banking crisis isn't as contained as they once thought. So there are real differences between the parties on the budget issues, which is the big meaning of this whole debt ceiling talk. Where are we going to cut and where are we going to spend money? And the Republicans are real big on, look, we're not going to spend more money next year than we spent this year because that doesn't make sense. We need to cut money out of the budget and we need to be able to kind of get a stockpile of money. No sense on already having issues with paying our bills and already planning to spend even more money the following year. And that's basically where the big halt is coming, is where are people on both sides of the party going to cut so that we can come to a deal in order to get this debt ceiling taken care of. McHenry said this is a hard stop. And of course, they were running that all over the place on the news articles and stuff. Feds pause, come out frustration. Republicans say this is hard stop, man. So, it was all crazy. McCarthy told reporters that there needs to be movement by the White House, and we don't have any movement yet. And so, they got to pause. Stocks that had advanced on Wednesday and Thursday, and they actually did more than advance. They actually just boomed, with credit for the gains going to part of upbeat comments by Biden and McCarthy on the debt limit standoff, where they were talking about a deal could be made very soon. Analysts suggest that the markets had turned too optimistic and Friday's setback wasn't a surprise. And anyone that follows the market kind of had an idea that it was booming too much. We talked about it in the video that we did last week, and I always have a saying that I like to say in moments like that. Too much, too quick, always equals a cool down. The signs of frustration today displaced the happy talk that occurred throughout most of the week, and we find an unsurprising turn during the constructive negotiation. And this was what 22V researchers Kim Wallace and Sandra Nemo said in a note. Terry Hounds is the finder of the Pangea policy, describing Friday's development as predictable bump in the winding negotiation road, adding that there will be what it means for markets is that there's very little hope of a deal by the end of Sunday, and negotiations will go into next week. So, what does that mean for the market? Well, the most probability answer would be that the big boys or the mega caps will probably cool off. And it wouldn't be too far reached because if you look at the rotation of big money that's been going into the market, 75% of all the big money that's been going into the market has been going into the top 10 stocks. And most of these top 10 stocks are related to, guess what? Artificial intelligence, baby. So those tickers that have a lot to do with AI will most likely take some hits. And some other ones that were booming on some sympathy plays to AI, specifically in the cloud computing area, like Amazon, Snow, Crowd, Now, CRM, and a few of the other ones, are due to cool as well. And we haven't even talked about this one. Apple, the general. Did you know I read a report today that 85% of all top line retirements have Apple as their number one holding? We are seeing a stock sector saturation, and specifically because of these elements. International and global markets, speculation and expectation, think AI, and supply and demand. And you can pick your poison on supply and demand because there's all sorts of supply and demand issues going on globally, from semiconductors, from oil, from natural resources, all of the above. Now, I say this all just to give you guys some perspective so that your head is on a swivel and that you guys are prepared for no matter what direction. But when we look back at 2011, when we had a debt ceiling crisis, yes, did the debt ceiling get raised? Absolutely it did. However, it went to very close to the X date, and you can see clearly right here, even though they made a deal, what happened? The market tanked some 22%, and the treasury yield tanked as well. Now, of course, yes, the market recovered, but as you can see, it took months for it to recover from that initial dump. And we had the treasury yield just sitting at the low until, pretty much recently when the treasury yields have been booming. So stay vigilant, stay ready, and get ready for war. The market is our war zone, and stocks are the battle. Join TWR and let's go to war.